Welcome back, everyone, to another explainer. Today, we're diving into a seriously fascinating piece of source material, Axogen's explosive Q2 2026 earnings report. Now, if you follow the medtech space, you already know that shifting the standard of care is, well, it's one of the hardest things a company can pull off. But Axogen, they aren't just attempting it. They're actually executing this strategic growth engine that's producing some absolutely phenomenal financial results. So, we're going to decode exactly how they're pulling this off, using their own data and strategic updates. Here's our roadmap for today. We'll be covering Q2 2026 financial highlights, core strategic growth priorities, commercial and clinical excellence, expanding the addressable market, and finally, their raised 2026 full-year guidance. All right, let's jump right into Section 1, Q2 2026 financial highlights, the explosive revenue beat. Let's kick things off with a massive figure, $69.7 million. That is Axogen's Q2 revenue for 2026. To really wrap our heads around the scale of this successful quarter, you gotta remember they're operating with zero debt obligations, and they're just sitting on over $113 million in cash and investments. So they are heavily capitalized. And this revenue number, it proves they're putting all that capital to work incredibly efficiently. And that $69.7 million marks a whopping 23.1% jump in revenue compared to the $56.7 million they generated in Q2 of last year. I mean, think about it. In the medical technology sector, leaping that far ahead in a single year is a massive indicator of market adoption. It's really impressive. What's great is that this revenue directly translates to profitability, which is highlighted by an incredibly strong gross margin of 74.2%. When margins sit that high, every single incremental dollar brings serious value straight to the bottom line. And we actually see that reflected in their adjusted net income of $7.3 million, which is up significantly from last year. So the takeaway here, they aren't just growing sales, they are growing profitably. Moving on to Section 2, core strategic growth priorities, firing on all cylinders. You see, Axogen's engine runs on a highly disciplined strategy. They are aggressively targeting a 15 to 20% compounding annual growth rate. So how exactly are they getting there? Well, by developing massive markets in elective and prostate procedures, continuously expanding their commercial sales force, and pouring heavy investments into real-time intraoperative nerve visualization tech. And the result of that multi-pronged strategy is this really fascinating shift in their sales mix. For the first time, Axogen's core extremities business makes up less than 50% of total sales. Now you might think, is that a decline? Actually, scratch that. Extremities is still growing nicely. Dropping below 50% is actually proof of an absolute explosion in their breast segment, which accelerated with more than 50% year-over-year growth. Basically, they're successfully diversifying their revenue streams. Okay, let's look at Section 3, Commercial and Clinical Excellence, Driving Surgeon Adoption. Before we dig into the data here, let's bust some corporate jargon. Axogen frequently talks about HIPO accounts. That just stands for high potential accounts. Simply put, these are targeted clinical accounts that management has explicitly flagged as the primary drivers for commercial excellence, sales productivity, and getting new surgeons activated. They basically hyper-focus their resources on these specific accounts to get the absolute best return on investment. And the crucial takeaway is this staggering number, 51%. More than half of Axogen's year-to-date growth came directly from these high-potential accounts. They really aren't just spraying and praying out there. They are laser-focused, and it's paying off, resulting in a 20% increase in productivity and the addition of over 130 active surgeons. But we all know commercial execution only really works if you remove the administrative friction, right? Well, Axogen is doing exactly that. They've secured commercial payer coverage for their advanced product that covers approximately 86% of U.S. covered lives. On top of that, they're publishing crucial clinical evidence, like the REPOSE study, to really validate their technology. And crucially, the CMS proposed CY 2027 payment rule increases core nerve repair rates, which builds on some classification gains they made a bit earlier. By stacking clinical evidence and expanding that payer coverage, they are creating a much smoother path to making their products the absolute standard of care. That brings us to Section 4, expanding the addressable market, the $5.6 billion opportunity. Axogen is staring down an incredible $5.6 billion U.S. nerve care opportunity. Their future growth is spread across 4 distinct fields. You've got traditional extremities at $2.9 billion, oral and maxillofacial at $1.2 billion, the emerging prostate market at $754 million, and breast at $677 million. When you step back and look at it, despite their massive revenue beat this quarter, they have barely even scratched the surface of this total addressable market. Now, I want to highlight the prostate segment specifically, because this is a massive future catalyst to keep your eyes on. Axogen is applying their nerve repair technology to robotic-assisted radical prostatectomies to help spare nerves. It's a real game changer. They've already completed over 100 procedures across more than 10 active clinical sites. The main thing you should take away from this is that management expects meaningful clinical updates by the end of 2026. That could rapidly accelerate adoption in this $750 million market space. Finally, let's wrap up with Section 5, raised 2026 full-year guidance, accelerating the destination. Because of their explosive Q2, Axogen has officially raised their 2026 full-year guidance. They're now projecting revenue growth of at least 24%, which translates to roughly $279 million for the year. They also expect to maintain those highly profitable gross margins of at least 73%. And, perhaps most importantly for investors who are analyzing their financial health, they expect to remain free cash flow positive. All of this just leaves us with a really clear picture of a company on a confident, forward-looking, and most importantly, sustainable trajectory. Which brings us to the ultimate question, doesn't it? Axogen has a staggering $5.6 billion market in front of them, an incredibly disciplined commercial strategy, and newly raised guidance. The execution is clearly there. So the only question left is, how much more of the nerve care standard can Axogen capture in the quarters to come? It's a truly fascinating story of med tech innovation meeting commercial excellence, and I highly recommend keeping an eye on their next quarterly update to see if they can maintain this incredible momentum. Thanks for joining me on this explainer, and as always, keep learning.